Alright, what's up? Welcome back everybody to Royal Blu FX. In today's video we're going to quickly go over some of the trades we took in as of yesterday, which is Friday the 28th of October. Also, if you're not a member of our academy, go ahead and join us at RoyalBluFX.com to start today. We do have a special going on starting today, which is a one-on-one coaching for a lifetime if you purchase the one-on-one lifetime membership. So let's get started.
Gotta show out. It's a new feel, but it's all good. Are you looking at me? Yes, I would. Got a big check.
Alright guys, so I won't bore you with how we start on the higher time frame. A lot of you guys know how we start on the higher time frame if you're following us and if you've been following us for a while. But yeah, normally we start on the 15-minute. We scale all the way down to 5 seconds to look for entries, right? Only because we're scalpers. On the higher time frame, the 15-minute time frame, we just look for quick liquidity areas where the market is potentially going towards to take out that liquidity to move the markets, right? Because we know that liquidity, the market moves based off liquidity. So right here is where we were trading as of yesterday on October the 28th on a Friday, right? And so you can see right here, we usually trade the US30 open. So what I'm going to do right here is I'm going to delete, cut some of the market out here so I can go scale down on a lower time frame so I can show you what I was doing. Now, I normally look for liquidity before I look for entries, or at least to see where the market is going. I look for where the liquidity is on the higher time frame. So here I couldn't really find any internal liquidity, right, because everything was bullish right here. You can see everything's bullish. You can see here how I marked some of it out over here. There's actually some of it over here that I didn't mark out. But when 6:30 opens, which is the New York Open, okay, this is all past. So I'm looking to catch the New York Open, and then in this area, I scale down quickly on the 1 minute like this. And then you'll see what I did over here once this works here. Okay, so here we are. So when the US30 opened, or the New York Open, it was here at 6:30. I wasn't here to catch this open, which is okay. So what happened was when price broke this high here, I waited for price to retrace. And now here's what's interesting. As I've been telling you guys time and time again, that whenever I trade, I always look for liquidity, period, okay? Breakup structures are great, which also indicates that price is potentially pushing in those direction, right? But price won't push up in those towards that intended direction if there's no liquidity, okay? So as you can see here, when price broke, we asked ourselves who broke this high here. It was this low. Everything in here is liquidity. And if you guys don't know what liquidity is, go ahead and refer to some of my channels here. I'll show some links going above here so you guys can check them out. Okay, this is liquidity for us right here, right? We see more liquidity there. Then we saw more here and here. So what we do is we don't go right into trades right away. We want to get a scope of things, right? Obviously, some of the questions you got to ask yourself. Well, you know, where am I going to be buying, right? And where I would like to normally buy is below our 50% equilibrium, right? Which is our discounted area. Not necessarily here in the premium, although price does go, it can potentially go up from the premium as well. If you see any kind of liquidity, obviously like here, this low and this low here, right? So you can see that there's a trend line liquidity happening here, and then there's your order block. You can see on the 5 seconds, you could have bought this potentially to push prices up here and then target your supply or your main high over here, okay? But normally for a big move, I like to look at in the discounted area because that gives it more of an explosive move to the upside or downside. We noticed that this was our low here, so then when price created liquidity, just right here, it had to be near or at the order block, okay? And so here was our order block, and you can see where liquidity, the markets came down here, quickly took out liquidity, and then I scaled down to the 5 seconds, and then our general rule is when there's liquidation, there has to be mitigation, then there's aggression, then there's a chalk and a boss, and then entry. Okay, so right here you can see where we had the chalk that started from here, where there was a low broken and a high broken. And then here was our entry, right? So this is the perfect chalk that everyone, you know, knows about probably. And so we just entered here with a 1% risk, and then we just held this. And what I did normally here is when I entered, what you want to always do here is pay yourself. Now, I marked out this liquidity thinking that there's some sort of, the price is going to give us some reaction here, because normally when if you zoom out here, you'll see that price was bearish this whole time. Okay, and when price is bearish this whole time, technically the trend is still bearish. It's not bullish, right? So when price goes up, takes out liquidity, prices could have gone all the way bearish and have taken me out. Okay, it could have taken me out at break even. But what I normally do is pay myself. So I pay myself as soon as price gets right around here, about 5 to 7% of the way, and then now I just let I take some of the partials and I let the rest of the market run. And the reason why I do this is very simple. It really has to do with managing, right? And a lot of the times when you're trading, it's all about managing your trade, and so I do this all the time, because it's a good practice. What I'm trying to do is not trying to be too greedy or too fearful in the market. I'm trying to be in between the greed and the fear. Okay, so if I see a lot of people are fearful, which is here, people are selling off their, selling off this the US30 here, I know there's a good opportunity for me to be greedy now, and I look for the entry, right? Once a chalk creates, and then I start, I enter the market and I'm in it. I'm in the market, right? But at the same time, I'm not trying to take too much money, too much of my money that I've entered in this trade, right? I'm just taking as much as I need and letting the rest run. If the rest comes against me, and should the rest come against me, right? If the market comes against me, then I'm out, right? I don't mind losing, some money or at break even, because that money could potentially be more profit in the long run if price never gets to my break even point. So here every time price is pushing more bullish, I'm always paying myself about 2 to 3% in the markets. Okay, and this really differs and this also differs on whatever type of trade I take, because in this case, since I know price is extensively bullish here and that we've reached the high, I have no problem paying myself out a little more as I keep going, because there are some trades when you're taking you're going against the trend, right? You're going against the trend, and excuse me, this is going too fast here. I need to stop. There's some trades when you're going against the trend and you don't want to hold this trade because you're going against the trend. So I wouldn't hold it. I wouldn't hold it entirely, all the way for partials. I would just take the whole entire amount and just get out. Okay, so here's what's happening here. So once price was bullish here, I look to re-enter again on the markets. Now notice that this low here hasn't quite actually broken the high here. Or it has actually by a wick, right? But this isn't a convincing break of structure, right? Normally, I don't look for, I do and I don't, depending on what the market of the structure looks like. But sometimes I don't look at the break of structures because I'm only depending on liquidity. And I know if I can catch the correct side on the liquidity side, right, and on the structure side, that prices should eventually go in that correct direction. So you can see here how I was mapping everything out. There was an impulse move, and everything here I saw there was liquidity right in here, right? And here's what I want you to see very closely and very clear. Okay, right here you can see I marked liquidity from this low to this low, right? So this was my demand zone here. Okay, and then once price went up here, price went below. I marked out now this low and this low, and you can see this wick right over here. If I zoom in quite really closely in here, you'll see what happened. There was a wick here that took out all this liquidity and mitigated this low right here, and it created more liquidity below. So my natural intention here is to think, okay, well, I'm waiting for that aggression. There's the chalk. You can see the low was broken here. You can see the high was broken, and there was my entry. Once I entered here, I targeted this high here, right? I'm not necessarily targeting anything that is way far out, in the higher time frame supply zones, because we don't know if prices should intend to go there, right? I mean, anything on the lower time frame can happen where prices go up, right, and then start going bearish, and they're going after some higher time frame liquidity. You don't see it here, which obviously you don't, but I normally targeted this high, and I took out partials, and then I let the rest run. And then naturally, the way the market works, it's paying me now every time it's going up. I'm getting paid 2 to 3% of the way every time the market pushes bullish. So I was on the 1 minute at this time, and I saw more liquidity here. You can see how I marked this right here. Right, price isn't really convincingly pushing up aggressive. It's just kind of starting to teeter and push bearish here. Once I saw this liquidity, again, I saw this wick here as my demand zone. Prices rested right here, as you can see, when I zoomed in here. Let me just make this bigger for you guys to see. Right there. Okay. I caught this trade here on the 1 second. Now I know it's kind of crazy, but there's a chalk that happens here. There's a chalk below and the chalk above, and here's where the buy was, right here. I don't know why this tells me it's there, but I caught it right there. Okay, right there. So once that happened, I got the chalk, and then there's my confirmation after the liquidation was taken. Then I took this entry, and then I just stayed in it, and I paid myself as soon as price got up to this high here. Alright, let's play this kind of quickly so you guys can see what's happening. Alright, so at this point I'm kind of like, something's not right, and then it looked like it took me out, right? The market is still in my risk zone. In fact, my risk zone was actually well below this demand zone right over here. I just put it up to 0.5 risk only because we were bullish after this move. Once price moved up, I put my risk half of the way, so when price comes out, it'll take half of my risk out. And then all of a sudden, prices just impulsively pushed to the upside like this. So this was a good sign. Let's go all the way to the, actually let's go to the 30 seconds time frame, because maybe we can have the market go a little faster here. Alright, so here we are, prices are pushing the bullish. Right, I'm always scoping the market for potential buys. Now we know we're nearing a supply zone, so my natural intention was to think that we're looking to target the supply zone, and you need to be targeting higher time frame supply zones or higher time frame demand zones. For a safer way, you can always target your current highs and your current lows. So from this low, I would have been able to target this high and be done with the trade. That's only if you want extra security in your trades, right? But if you're looking to target anything higher, right, make sure to pay yourself at the main high or main low of the trade here. Like here's our main high, right? I would have been able to pay myself out here at the main high, right? And then let the rest run, okay? Because we have no intention when the price breaks structure, we have no intention if price is going to break above those highs. So we really need to be able to make sure that we are playing on the safe side, on the correct side of the market, which is managing our trade correctly and taking out some or most of the money and letting the rest run. Let's continue here and show you what's happening. So you can see everything's pushing bullish, right? You can see my intention here is to mark out liquidity. You can see that when there was a high broken, there was liquidity marked right there. Let me just zoom in here. There was liquidity right there and right there. Now I can see this on the 30 seconds right here. You can see there's a buy, right? This is called trendline liquidity. Then when I saw this, I went quickly down a lower time frame, and then I wanted to see what was happening in here. Okay, you can see that right below this trendline liquidity, if my market populates and it works correctly, the charts, excuse me, it's pretty bad over here. Okay, right there's your double bottoms, right? So there's buyers that were here. There's buying pressure that's happening here. So there's, that relative trend line and relative lows that you're looking here. Price comes and sweeps all this. There's that order block here, which is a flip zone. A flip zone that happened, right? Which is right around here. I don't know if you guys can see it, but hold on. Okay, there we go. See, there was a break of structure right there. And if I put my cursor there, my crosshairs, you can see here is where the market has tapped. And that's where price tapped that flip zone. I looked for my chalk, and then I was able to enter this market easy peasy right here. So I follow my rules again. I wait for the chalk. Right, here's your entry. Notice where that chalk was made, right? Where it was laid. And then if I push this market down, it's a little slow here. Okay, you can see that this is the high we were targeting, right? Once we hit this high, then we let the rest of it run. Okay, we always pay ourselves here. Let's get out of the 30 seconds, get on 30 seconds, and then show you what happened here. All right, so we are playing this right now. So we paid ourselves, right? And I want you to notice, we're thinking, okay, everything's going well. Okay, might go bullish, whatever. Then I keep marking out my liquidities just so I can see what the market is trying to do and where it's potentially wanting to go. You can see that the markets are wanting to go towards liquidity, take out more money, right? All the stop losses, and then go. I marked this as my demand zone here, so I could pay attention when price gets there. So watch what happens here. So price takes us out. We break even after we took our money. It didn't quite mitigate this this demand zone, which is kind of weird. Or did it actually? Actually it did. I didn't fully mark my demand zone correctly here because it's just right above the wick right there. Right there. And yeah, it still wouldn't have tagged our demand zone. So yeah, it didn't tag us at all, but I understood the scenario behind this. This is what you need to understand as a trader, is that when price takes out liquidity, that it's just bound to go back the opposite way, regardless, even if it tags your supply or demand zone, right? It would be preferably great if prices do tag your supply and demand zones, but sometimes they don't, and this is left as inducement. So when price pushes bullish, you'll understand why. Well, it's because it took liquidity here, push bullish. Now, I could have entered at this low, but I didn't. So what I did was instead I caught the buy here when it's considered the flip of this area. See, when there's that break of structure here, that break over here, there was our flip. So we bought the flip, and then we stayed in this, and we obviously paid ourselves at this high, and then we let the rest of the market run. All right, so keep watching here. I want you to see what's happening here. Now I'm marking my liquidity, as you can see here and here. This was on the higher time frame, on the 1 minute. So I was able to see what was happening here. And once price got here to this demand zone, again, it tagged our demand zone. I was on the 5 seconds here where price gave us a chalk. Again, it's just, this whole process is a rinse and repeat, you guys. It's a rinse and repeat. You really want to just rinse and repeat, and follow the same rules that you always follow, right? Let me just zoom out here so I can show you a bit better. All right, so here, as you can see, price is bearish, and it gave us that chalk, perfect chalk that we're looking for right in here. I'm going to zoom in right here, okay? Look at that. The low was broken, then the high was broken. This was my area to buy. Prices went just a little bit below, which gave me a little, I was a little, not aware, but I was a little nervous about this one. But then price just started going bullish, and I was like, all right, that was it. That's the move. We're looking for that aggressive move. And so we stayed in this trade and paid ourselves quite handsomely once price reached at this high. And then this was my supply zone where I wanted to end everything. And fortunately for us, everything worked out perfectly because we made over 140 R on these on this entire session, this entire New York session. So all on scalping, obviously, right? So that's it, guys. And I took everything out. I cashed out on everything. I didn't want to hold these trades during the weekend, although the market did actually kept going bullish here. If I do this, and I'll show you guys what happened here. Let me just exit here so you guys can see what happened. That the markets actually went more bullish from here. Look at this, right? It went all the way up, right into our supply zone. So yeah, I could have stayed in some of the trades. I could have whatever, but I don't like being in the market when the market is closed on the weekends. All right, guys, I hope you guys understood what I was talking about here, and I hope this was very, very helpful. If you liked it, throw a huge thumbs up on this video, and definitely subscribe to the channel because we always give out free content, guys. Until then, I will see you in the next.